Welcome back. You're watching Big Deal and we are discussing the scope and disruption that Ocen can create. So, Rishikesh, critical to the success of this particular network is going to be the onboarding of many lenders. We have a live example of Kotak Mahindra Bank being there. Seven lenders are already on the network. But the apps, the front-end apps, they are the ones who also need to show the exuberance for this.
Right.
So how is that onboarding process going on, and what is the level of enthusiasm that you're seeing amongst the various players in joining this network?
Okay, so we are getting like a lot of interest, but we are purposefully taking it slow because when you're building something of this scale, you have to get it right? And we're not thinking about 1 quarter, we're thinking about 15 years. So look, there are two pieces. On the front end piece, there's a lot of interest, but we've not onboarded anyone other than GEM, and now we are building a second app called SIDBI GST Sai for invoice financing. But we have a range of use cases where people are already interested, from milk receipt financing, agri-trade financing, even actually to buy a buffalo for dairy farming. So they're very use cases which previously wouldn't have been financed. But that is different from a lender onboarding, which is, where they have to follow KYC prescribed by the master KYC directions of the RBI. So that is pretty clearly laid out. So onboarding is different, right? So onboarding and the front-end apps is something we will take a call in the next 4 or 5 months when we're ready. And, the KYC process to onboard customers, I think Deepak may be in a better position to speak to than me.
So I was primarily focusing on the onboarding by the digital commerce apps, because that is going to be very critical. Lenders are ready to disburse, they will assess. But what about these digital apps? What is the interest level there?
So I have over 70 companies who are interested in going live with all the big names that you usually hear of. I won't name them because, they obviously, we've not moved. But whether it's payment apps, e-commerce sites, sites that cater to cooperatives that manage actually when the dairy farmer sells to the cooperative, then they process it and sell it, those sort of apps. Like you name it, actually. Use cases are all over. We have a rural like a banking correspondent company that says we have, people who can guide people how to use this. So can we create our own app? So the interest is actually very heavy.
But what is in it for them? What is it that they are really coming for?
So look, this is a more complex answer. So today, there are RBI digital lending guidelines, which say that, when you onboard what they call lending service providers, they charge the lenders for this. Now, that also creates some inflation in lending costs for the end user. So while that could continue as a model, we are also contemplating, we need to engage with the RBI for this, is to create currently the model is agent of the lender to the agent of the borrower, where the borrower is charged. And this is a page out of the SEBI book, which has done this in mutual funds, where there are two models, where both can be followed based on the choice of the consumer. So the idea is to surface choice for the consumer. The way that front-end app would make money is either from the lender, or on the other side, they charge the borrower, which today, I'd say very clearly, is not allowed by the guidelines, but that's something
that is going to evolve and that will be formally also established. But Deepak, whichever model we follow, there has to be a little more escalation because of the commission to be given to the ones who are generating those leads, whose business partners are coming on board. So what do you have to say about this collaboration, first of all, with digital commerce apps? How do you foresee it? And also, in terms of cost of acquisition, considering the ticket size is so low, will it be a volume play and will it make sense?
If we reimagine how the lending is getting redefined, probably this is the first stage of what I call it as a lending ecosystem. And when I say lending ecosystem, we always had the payment ecosystem where the payment were there at the point of checkout, where you were shopping and how you availed credit and how you made a payment, be it at a retail store or online. I think we are seeing a similar shift now on the merchant and supply side, because now every supplier is able to look at, can I avail credit for a transaction that I'm doing and for how long? And I think this completely is going to redefine how the lending will happen. And when you ask this question of the ecosystem, I do see two big pegs on which this is growing in a more short term, while obviously the long term prospect we can all talk about separately. One is, I think, the whole GST invoice based financing, because today, while this is limited to Gem Sahay, but we all know the kind of volume that goes through the whole GST invoicing every month in this country. And I think as we are building those railroads, we will see a much wider adoption of consumers coming in the play. I think the second big shift we have seen is a lot of e-commerce companies and B2B suppliers have started to look at cash flow based lending within their ecosystem. So as lenders start to become more comfortable with this kind of a lending model, they are extending the same model beyond what we are running in the confines of Gem Sahay. So it's propelling the market, but it's propelling it in different forms and shapes. And I think the last point that you mentioned, finally, the market will determine what is the right value and the price that is associated with it. So be it the loan service provider or the other ecosystem players who have a large engagement layer, some of them may choose to offer finance as a part of their embedded value proposition. So not necessarily everywhere the borrower has to pay origination fee. At the same time, lenders will continue to be far more competitive for a kind of credit quality or the platforms from where they want to onboard customers. Last but not the least, I would say is that this also is the starting block for lenders like Kotak Mahindra Bank. Because right now we may see that the ticket sizes are smaller, or frequency may not be high, or number of borrowers are limited. But over a period of time, we will see a change in all these three parameters.
Yes.
While we expect more borrowers to come, we definitely would see a higher frequency of these borrowers coming and availing. But most importantly, I think we will start to build an alternate credit profile of these borrowers beyond just their bureau. As we start seeing a lot more of data around what kind of products are they buying or selling and where they are taking financing, what is their repayment record, I think we'll be able to create more such curated products for them.
That's right. Two important things there, Deepak, for this to become much more robust. And the way you're visualizing it is, first of all, the credit profile of the borrowers, and the second, also generating the credit culture in the country, even in small businesses, in hinterlands, SMEs. So, Rishikesh, in this, the critical bit, and I'll ask you again, commercial space, you did mention RBI regulated models will be something that will be in play. But apart from that, these digital commerce, apps, if they are interested, there has to be more, maybe more relationship building with their own vendor partners and creating more revenues. So how do you see that this line of credit can be a source of many more transactions and business activities, far much more than what it is showing right now?
No, that's exactly right. Now, I'll give you anecdotal evidence. So we obviously tested. So we used to sit down with gem sellers and, walk them through the app just to see where they were getting stuck and that sort of thing. And once they started using it, a few, asked us, what else are you building? Because credit is so constrained to that segment that I think, you touched upon credit culture. I think there's just credit starvation for that particular segment. So what we're doing is unlocking this for them. To answer the question, like, why do front-end apps do this, right? So think I'm an e-commerce company. At the end of the day, if you provide people liquidity to run their businesses, you're going to generate more gross merchandise value on your platform. And actually, that is also what our intent is to do on GEM, right?
So GMVs also lead to valuations in these companies.
Right. So, I mean, look, credit has always been the fuel for any developed economy. What we are saying is, look, our top 100 million get served, corporations get served, but the billion don't get served. So what we're doing is building for the billion. And truly building for the billion, not, not saying that, we'll build for the billion and then build for the 100 million and, you serve 40, 50 million customers. So this is the hard road. It's very difficult because there are a lot of challenges along the way as you go.
Yes.
But this is what we're trying to do, is drive that credit. And if they create a credit imprint and they pay back their first sachet loan, that opens up bigger ticket loans, that opens up more business, and we hope that then translates into more economic development for the country.
Right. So final question, Deepak, and very quick answer to that. You've been in this business for so long. For credit culture to develop where it's under-penetrated, how much time do you think it'll take? Because when insurance came to India, more than a decade back, they said, okay, penetration and it is underserved. But it took just so long for the Indian mindset to change. What is the acceptance of credit culture that you're seeing at the ground level in the Bharat, so to say?
I would say that a lot of people today need a way to prove their credibility. And traditionally, bureau was the only way through which this credibility could be proven. This probably will open up a very different dimension through which they'll be able to demonstrate by borrowing it for a short term, for a defined purpose, where we have an end visibility of what are they borrowing against and how will that get repaid. I think as we build this whole ecosystem between data, real-time underwriting, ease of collection, and full visibility of transaction. In my mind, these are the starting building blocks. On top of it, good quality customers definitely will be ready to get access to probably a larger credit or a longer tenure credit.
All right, Deepak, thanks so much for your views there. And Rishikesh, thank you so much for explaining and simplifying the whole process of building Open and what is the scope of it. So looking forward to that Open rollout and to fuel the small businesses in the country and also to create that credit culture for the real financial inclusion by democratizing credit. That's what Open is aiming to do. With that, it's a wrap on Big Deal. Thanks so much for tuning in.